The vote of confidence on the Greece PM passed with 155 votes. He needed 151 in order to stay in power, and that was happening. Now, what next? They're going to have to vote on the austerity package, and then EU and IMF are going to have to get their money together to forward over to the Greeks, and so it's just step one of a process. The market or the expectations that he's going to get the votes, and when the announcement came in, we did see the euro move sharply to the upside, move above this double top at this point right here. But from that point, we could not sustain any sort of momentum, and the market started to move back down. In the afternoon, we had this nice little 100 bar moving average on the 5-minute chart hold support on a number of different occasions over the last hour or so of trading. That gave clue to the sellers on the downside that it was okay to try to force the market back in this direction. The move below the 200 bar moving average was then came and went, and as you can see, we're in between the 100 and 200 bar moving average currently at the moment. Take a look at the hourly chart. The market has additional support down against the 200-hour moving average, and that also corresponds with this trend line at the 143.33 level, and that may be ultimately where we're going here for the euro versus US dollar. If it can maintain this negative tone that we're seeing here, and in particular maintain the price below the 100 bar moving average on the 5-minute chart. So that takes care of that euro versus US dollar. Let's take a look at the sterling versus US dollar. There we go. This is the daily chart in this currency pair, and a level that you're going to have to pay attention to tonight is 162.62 level. That level corresponds with the 100-day moving average. Yesterday we got up to a high of 162.53, about 10 or so pips away from that level. And today, the price still remains in play, as you can see here, currently trading at 162.27. So let's keep the 62 level in mind going into the evening session. Let's look at the hourly chart next. We have the 162.62 level above. We put a horizontal line in there off the hourly chart to remind us of that key level. There you go. Above that or below that level is the 200-hour moving average at 162.48. We've been able to stay below that level. In fact, spend most of the day in between what is called the goalposts here. The goalposts are defined by the 100 and 200 bar moving average. As you can see, for this extended period, except for these little 3 bars here, when the market moved below that level, the price has been in between our goalposts. This is indicative of a market that is somewhat bullish, moving above the 100 bar moving average is bullish, but cautiously bullish, as it can't extend above the confirming moving average. The confirming moving average is what I call the 200-hour moving average. So a move above this moving average should lead to a further upward momentum, but by the same token, a move toward this moving average is likely to find support. But if it should break below in the overnight session, we should see lower prices again in sterling versus US dollar. So down below we have a 161.71 is where the 100-hour moving average comes in, and on the top side we have the 200-hour moving average again coming in around looks around the 46 or so level there. If those would be our key levels to pay attention to, right up here and right down here. So let's move into another currency pair. We'll take a look at the dollar versus yen next. And if we take a look at this chart, we've seen the dollar move sharply to the upside here, breaking out of this triangle here, the top side triangle here that been containing the price for most of the trading day. In the last few hours, we did see a move above and then an extension. The price extension has resistance against our 100 and 200-hour moving average. Our 200-hour moving average comes in at 37. Our 100-hour moving average comes in at 39. In between that is a 38, and that's where our 50% retracement level comes in. So needless to say, we have a number of different resistance levels up above in this area right here, and that will be level that the market will be paying attention to into the new day of trading. But as you can see, we're currently trading down at the 25-26 level, and staying above these trend lines on the downside. Or risk would be for a move back below the 80-18 level. So traders who want to potentially trade a breakout to the upside, and we are seeing a break and a move above this trend line, would have risk if the market could not sustain the move above this trend line, and reward would be confirmed on a further move through the 100, 200, 50% retracement that would target other levels to the upside here for the dollar versus yen. The dollar versus Swiss franc on the daily chart continues to show activity within the lower areas of this chart until we can get above the 85.54 level on the top side. This currency pair still maintains its negative bias here, and taking a look at the hourly chart, you can see here that the market broke below this trend line in the afternoon trading at the 84.20 level, and that forced the market to the downside here. We did I put a parallel trend line against the top here, and just kind of fit it in here. And although it's not perfect here, what we can look for is 83.93 to be a support level on the top side. What is clear to me in this chart is if the market can get above the 84.23 level and 24, and then above the 32 level, these are the trend line, the 61.8 and the upper trend line. The potential for a move and test of the 84.48 level and 50% retracement. That level held for most of the trading day here today, apart from a few little blip to the upside here, but that would put pressure on this key resistance level and could lead to further momentum move to the upside here in the dollar versus Swiss. But until the price is able to get above this area right here, the downside still remains a favorite for the dollar versus Swiss. We'll just see if the momentum can continue in that direction. The euro versus yen is showing some signs of volatility here. But we have moved above the 200-hour moving average here for the last 6 or so hours, and the price has been able to maintain its bid above that level. So clearly the 200-hour moving average will be our key support level on the downside today, or our stop level, if you will. Staying above 115.19 should lead to further upside momentum. Getting back above the 50% retracement, it did move sharply higher above that level off of the announcement of the vote of confidence, and moving back above that 65 level should lead to higher levels in the euro yen. The dollar versus Canada has a key 38.2% retracement and 100-day moving average coming in at the same level here in the new trading day. That level comes in at the 97.24 level, and a move above that level, which we're currently trading at now, would be needed to push this currency pair back to the upside. In these 2 days, the market fell below this trend line and below the 100-hour moving average. Today is the first day below the trend line, which is now higher, and the 100-hour moving average. We'll see if that momentum can continue. So watch the 97.24 level in the dollar versus Canada. The Aussie versus US dollar off the hourly chart is hanging around the 200 bar moving average and the 100 bar moving average for that matter. The support, there's a nice little support trend line here that's touched a number of different points along the way here, including in the last hour where the market went down and tested the 105.79 level and found support buyers, moving the price back up to the 98 level. I might want to push this trend line further up to the top side here, give it more of a chance, a little breathing room here. But what we can notice here is our 200 bar moving average is moving sideways at the moment, sideways along a remembered line here. These lines correspond, this line corresponds with these highs right here, and the support level right here, this resistance level here, support level here, and now I've been above and below during today's trading. So that level corresponding with the 200-hour moving average at the 105.91 level is a short-term support level, as is this trend line coming in at 105.81. Stay above these two levels, and a move above the highs and the 61.8% retracement of this last move to the downside at 106.22 open up the door for further upside momentum in the Aussie versus US dollar. The euro versus sterling chart here has a nice support line coming in. That support line has touched a number of different points along the line. One, two, well, I guess 2 points along that line, but the slope of that line is nice upward slope here for the currency pair, and we'll be watching the downside support as it comes in right up the 38.2% retracement line at the 88.32 level. That's of the move, the longer term move that saw the market move from this low to this high, correct down, and then move back to the upside. Let's keep track of this trend line and see if this level can hold on any sort of move to the downside. It currently comes in around the 88.32 level. So that about takes care of it for this evening's evening report. Be sure to check in with us tomorrow. We do have the FOMC interest rate decision coming out. Fed Bernanke comments from the Fed will be eyed that come out at 2:15 tomorrow afternoon. Look forward to that. My name is Greg Michael.